Hey everybody, welcome back to the channel. Today we're talking about a couple trade setups for you to consider here in this week. I wanted to start out with the dollar. We had a major move recently with the dollar after basically we got some interesting stuff from the Federal Reserve. The Federal Reserve in their meeting on Wednesday basically said that there are some recession fears that are, reasonable, but at the same time, they continue to press on with their rate hiking process. And I believe that there is a 50 basis point expectation for the next rate hike that is being expected. So what we saw from that is some volatility yesterday, but now the dollar coming in strong yet again. We're trading around 107 on the dollar index, which is a pretty impressive run up here, considering recently we had that major sell-off off of CPI numbers. So kind of yesterday's meeting sort of gave us a bit of strength here to the dollar. And as weird as that is, yes, a recession is concerning, but the whole world is dealing with recession concerns and inflation problems and things like that. So the Fed remaining relatively hawkish despite a bit of recession shows that they have a lot of interest in raising rates, beating down that inflation and getting that out of the way, which is causing the dollar to continue to act as that safe haven amongst other currencies. So with that in mind, let's take a look at the dollar here as well as some other currency crosses with it, starting with euro dollar, which took a huge nosedive after all of this volatility. And we saw basically price hold the 1019 level very well. So if we go ahead and mark up our charts here, in my opinion, right? So the euro dollar is one that I am short biased on for sure, right? I've been short biased on this one for a very long time. Here's your 4-hour chart. We sort of have made nice pushes to the downside. And as we start to try and break out of this area, here's my opinion. Watch for a break and close outside of this low. If we're able to do that, if we're able to close below 114 today, it could actually be a really interesting break and retest sort of trade idea for the Euro USD. Again, we have support here. So we are currently sitting right around support, but if that level is able to break, you could get some really beautiful continuation moves here on the euro dollar, especially with yesterday, the Fed kind of reinforcing their hawkish stance. That could be a catalyst to continue to push the euro lower. Now we saw a lot of rejection up in this area. So of course that was a nice healthy sign from the bears that sellers are still in full control here. So again, the key idea that I'm looking at with the euro dollar would be a break and retest underneath this market structure here around 1013. We'll see if we can get that here today and going into Friday's report. Real quick, guys, I want to jump in here and show you that if you would like to see the trades that are being taken by myself or my team member here, you can see Frank's, Ivan's, and my trades inside of our Discord channel. If that's something that you're interested in, if that would be helpful to you to read along with our trades and ideas and things like that, then you are more than welcome to join the Discord channel. It is linked down below in the description. And if you sign up with the promo code there, you'll get a super discounted rate because you're a channel supporter. So thank you so much for watching, and back to the video. Let's take a look now at GBPUSD and see technically what's going on here. Again, a bearish perspective on the pound USD. We've talked about the pound on the Edge Finder recently. Let me show you this for a second. I'll give you guys a little bit of a break on the pound dollar. So the pound USD has been really quite weak recently, and this is something that we've talked about. We've been very bearish on the pound pairs. If you've been watching the live streams, we've been talking about looking for sells on pound pairs just because it has that high risk oriented economy. And of course, when you have something like that, it's going to land you with a negative reading, usually in a risk off environment where we see, markets really concerned around recessions and inflations and stuff like that. A lot of pound pairs coming up to the top of the list on our list of things to potentially be bearish on. Specifically, of course, the very top ranked is GBPUSD at a strong sell. Now, if we take a look across the board, what we can see is that the commitment of traders data is pointing towards selling the pound dollar. The retail sentiment is pointing towards selling, seasonality. And let's actually go take a closer look at GBPUSD here, so that we can actually see where we're getting this score from. Of course, the Edge Finder, what it does is it takes a list of lots of different components and builds a bias based on what we're seeing. So again, if we're getting overall, here's our scoreboard, here's our score chart. If we take a look at the summary, we can see we have that -8, and then we can break it down into its individual components with things like the commitment of traders data, the retail sentiment, seasonality, right? So the month of August is historically pretty negative here for the pound against the US dollar. And that's just, again, a data study using past historical data. We can see what the average expectation for the pound is looking like. If we take a look at things like inflation, unemployment, and interest rates, we have things tending towards favoring the US dollar. For example, in the US, we have lower unemployment. That's healthier for the economy. If we take a look at interest rates, higher interest rate in the US. In the US, we also have lower inflation with GBP coming in at 10.1%. Those are a lot of red flags for the pound, which could cause continued bearishness on things like GBPUSD. So long story short, we've been looking predominantly to be short biased on pound pairs. So if you're looking at this and you're saying, well, where's the sell? For me, the sell would probably be a break and retest of structure similar to the the euro against the dollar. So breaks, retests, continuations. Now, how would I actually play this? Well, I'm a swing trader, so if I was to look for something like this, again, I'd be looking for the break underneath, and my stops would probably be above market structure there, which puts you at like 84 pips, which again is probably not ideal for a day trader. But for a swing trader, I'm looking for a bigger move, and a potential return back down to previous lows is still quite a distance away. If that were to happen, if you were to get a straight shot away on the pound USD, you're talking about a 3-to-1 there on a risk to reward basis. That's not bad at all, especially if we can get, again, that break underneath support today. That will be interesting to watch out for. A break and retest to me looks bearish on this pair. Until further notice, I am pretty bearish on the pound, if you can't tell. So if I continue on, we'll take a look at some more things. I would like to take a look at gold here today, see what's going on with XAUUSD. Pretty bearish after yesterday's report. Again, the Fed came out pretty hawkish, and that put us almost back down towards the lows here today. To me, I'm still relatively bullish on gold and willing to pick it up long. I actually have started to build a position on my stock market account. I've been buying GLD just in pieces. So if we come down to this level again, I will probably pick up some gold on the long side around 1756, 1757. I'd be interested in potentially picking up some GLD, which is the gold ticker on the US stock market. It's an ETF that tracks the price of gold. So yeah, I'd be interested potentially in picking some up there. With the idea being, I think that if we do in fact enter into a recession, it is very possible that unemployment does begin to spike, and if that story starts to play out, market fears could come back into play, and gold could see a bit of a run up. So that's my personal take on it. If the Fed, one of the big things holding back gold, people have asked why hasn't gold rallied more? Well, it's the Fed, right? If the Fed is maintaining a pretty hawkish stance, that's going to make people flock to the dollar. Strong dollar could weaken the price of gold. And gold tends to thrive when economies are in shambles and uncertain and super fearful and, that sort of thing, which is on the, it's on the conversation, but so is the strong Fed. So if we get that Fed to crack, the dollar could come down and the gold market could actually rally pretty substantially. I'm not trying to time that per se, so I'm actually building a longer term position on gold right now. So if we get pokes down into this area, I'd be potentially interested in picking some up longer term, expecting a potentially more dovish Fed somewhere along the line. So that's how I'm taking the gold market. Now, if I'm looking at it from a day trading perspective, a shorter term perspective, this thing looks pretty bearish in the meantime, right? So you have levels of resistance in play. So if you're looking at it from a day trading perspective, again, retest this area, beautiful sell there. In my opinion, it probably is due for, on the day trading and short-term side of things, to head down to that 1756 level. I do think that that's pretty reasonable, which still gives you plenty of room to the downside here to potentially look for intraday stuff if that's something that you are into. But again, for me, I really like the idea of potentially picking some up around 1756, 1757, somewhere in this area. To me, off of the higher time frames, looks like a nice little buy opportunity on gold. We have put in, as we spoke about this earlier, we put in a low on the higher time frames. Like you can see that here's your 1700. It was about the 1680 to 1700 mark, right in that zone that we had some clear, strong buying come in. And now for me, I've been looking to pick it up on a pullback. So I'm actually not afraid to potentially build a position in this area as we start to pull back once again. So that's my personal take off of the daily chart on this one. One more, let's take a look at USDJPY, which has been a very interesting one to watch. We have held very tightly this level of support here. And this is off the daily chart, so this is a longer term level. You'll notice that we came down to 131. We found that huge buyer, retested, but put in a higher low here. So the dollar yen looks pretty healthy. If you're looking at this thing from a swing trading or even day trading perspective, for me, we've been caught in this consolidation. What I'd like to see for potential buy setups would be a breakout long like this, if that happens, right, breaks, retests, I think we could actually look for a rally potentially back into the previous high, maybe in the month of September. That's something on the docket. We'll have to see. Again, like this, right? So I would probably be looking to keep that stop relatively tight with the idea of potentially returning back to that 139, potentially even into the 140s. Could be coming here. We've been pretty bullish over the longer term here on dollar yen, expecting the dollar to continue to act as that that safe haven, strong currency during all of this concern. Has been playing out pretty well. And until that changes, right, with the Fed maintaining sort of a hawkish tone yesterday, I'm still relatively bullish on the dollar compared to most currencies. It's not my favorite right now. I do have some other currencies that I'm more bullish on, but just generally speaking, I know a lot of my viewers love talking about the US dollar. For me, I would pick up the dollar against the yen personally before I look to short it. So yeah, breaks and retests. If we get a nice green candle up there on the day, that might actually be interesting to see, especially if we can break through this. That might honestly be a trade setup for me next week. I'll keep tabs on this one. This will definitely be one that is on my watch list going into next week. If you enjoyed today's video, make sure to smash that thumbs up button, subscribe, and see you next time. Looks like it's time for your next trading video. Check out the videos here and here for more free trading content that should help you in your trading journey. We try and keep it real here, so make sure to subscribe for more content that is down to earth, realistic Forex trading content. See you in the next video.